All right, we're catching a little bit here, and they're coming for tech. NASDAQ starting to move a little bit, trying to reclaim some losses. Russell still down about 5%, but you do have NVIDIA now getting closer to 99 bucks, and Apple has gotten in line. There it is, that buying of the dip showing up in Apple, now only down 4%. Tom White here with me looking at some options. Joe Bonner joins us from Argus Research, senior securities analyst covering tech, media, and telecom. So when you look at the market this morning, Joe, what do you see? Because it sure is a bloodbath.
Good morning, Oliver. Yes, certainly. Tough to be a tech stock these days. You know, and we're seeing what we've seen over the last month is this come down in tech. So yeah, it's continued this morning.
When you see companies getting hit, either high single digits, some double digits, I mean, is it obvious that this is buy the dip moment, or how much macro work does one have to do to try and figure out where the economy is going over the next 3 months to know whether or not to buy this dip?
Yeah, so I'm not an economist, so it's hard to talk about the market, the GDP, but I can talk about my sector. And you know, we've had this recession talk for what, a year and a half now, and you know, there's a kind of a little bit of a disconnect. I'm not seeing the guidance takedowns that you would see. I mean, there's usually people holding pat on guidance, or there are a couple of companies like ServiceNow raising guidance. So the data's not in for me yet. On the recession thesis.
As everyone already knows, Palantir has been a wonder, and so has its stock. The company recently reported second quarter earnings that were better than projected, leading to a raised full-year guidance driven by the strong demand for its advanced artificial intelligence chips. This outstanding performance has captured the attention of investors and industry analysts alike. So, how did this happen? And what implications does it carry for Palantir's future? That's what we will break down in today's video. We will delve into the factors behind Palantir's success, including its strategic initiatives, market positioning, and technological advancements. Additionally, we'll explore what these developments mean for the company's long-term growth prospects. So please, don't miss out on this in-depth analysis. But before we do that, if you want to keep up with Palantir's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
When you look at what we should be getting in this next batch of earnings, I mean, this is where it starts to get into the cloud stuff and some more of the services trades that actually have struggled a bit since the AI boom. I mean, cloud stocks have been huge underperformers as a sector compared to hardware. Do you feel that that's going to reflect negatively in earnings, or how do we kind of explain that underperformance?
Again, I haven't seen it in earnings, and
what do you think's coming?
I haven't seen the guidance takedowns that you would see if there's a real problem here. So there's a disconnect.
Yeah, well, that's kind of what do you think? Like when you look at your coverage for this quarter, is it going to be rough generally, or do you feel the companies are going to be able to surprise to the upside?
I think there'll be some surprises to the upside. I mean, they got to make their numbers, obviously, as they do every quarter. Key is margin expansion. Profitability has been key in the market for a number of quarters now. I'm expecting more of that. You know, good margin expansion, if not great margin expansion, and making their revenue and other key performance indicators.
The company reported impressive financial results for the second quarter, with revenue reaching $678.13 million. This marks a significant 27% increase compared to the same period last year and surpasses analyst estimates compiled by Visible Alpha. The company's strong performance was further highlighted by a net income of $134 million, which also exceeded projections. This robust financial health translated into earnings per share, hitting a record high of 6 cents. These results reflect the company's successful strategies and market positioning, contributing to its continued growth and profitability. But all of this didn't just happen overnight. Palantir's CEO said that their reports showcase nothing but the enormous demand for their chips, which symbolizes solid confidence in their software technologies. He called it unbridled demand. This is very evident in the numbers. The company's commercial revenue solely stood at $307 million, growing by 33%. Alongside, The U.S. commercial sales equaled a staggering $159 million, representing an increase to 55%. Alex Karp, the firm's accomplished CEO, said that the growth of their business has been re-accelerating steadily, and they can see an unprecedented opportunity ahead to capture and build on that momentum. Basically, they haven't had enough, and they are already seeking for more. Owing to this, the company does actually have super bright estimates for the upcoming quarter. But what do they expect for the upcoming quarter? Let's find out. Hello everyone, and welcome back to Investocracy.
We've got Palantir that's got a big drop off on the chart coming into this report. Maybe we get some relief there. Joe, what do you think this afternoon? I mean, $22, lowest since the last earnings. Basically, the gap up from the February earnings. Might Palantir be a place of solace this afternoon?
Yeah, again, consensus is looking for 22% revenue growth, but I think, for investors, you need to look at I think the key performance indicators are going to drive the market. And that's that U.S. commercial revenue growth, 40% in the March quarter. I think the market's looking for 40% or 40% plus this quarter. They got to hit that number. Again, on margin expansion, they've been expanding margins very well. Multiple percentage points. They're looking for 6 or 7 percentage points this quarter into that 31-32% range. So those are the numbers they got to hit. Cash flow has also been growing great. That grew cash flow 80% in the March quarter. So strong cash flow, strong margin, and hitting those performance indicators. Now there's some other smaller indicators. The deals over $1 million, which is 87 deals last quarter. Things like customer count and things like that. Important, but focus on that U.S. commercial growth.
The firm has provided an optimistic outlook for the upcoming quarter and the rest of the year. It anticipates third quarter revenue to range from $697 million to $701 million, which is even higher than most analysts' predictions. This positive projection reflects the company's confidence in its continued growth and market demand. Additionally, the firm has lifted its full-year guidance significantly. The new forecast places full-year revenue between $2.74 billion and $2.75 billion, up from the previously projected range of $2.68 billion to $2.69 billion. This upward revision underscores the firm's robust performance and its ability to capitalize on market opportunities. By raising its revenue expectations, the company signals strong business momentum and investor confidence in its future prospects. This adjustment in guidance also highlights the firm's strategic initiatives and successful execution of its business plans, paving the way for sustained growth and profitability in the long term. Despite these successes, high valuation multiples remain a concern. The stock's forward price-to-earnings ratio of 87 and price-to-sales ratio of 28.6 suggest high market expectations. However, this quarter's results are a promising sign toward meeting those valuations. The robust performance in U.S. commercial markets, combined with continued strength in the government sector, demonstrates Palantir's ability to balance its dual focus effectively. The company's strong results highlight its capacity to drive significant revenue growth in both private and public sectors. This balanced approach reduces risks associated with relying on a single market segment and underscores Palantir's comprehensive growth strategy. While the high valuation multiples present a challenge, Palantir's impressive performance and strategic positioning indicate it is well on the path to meeting market expectations and delivering long-term value to its shareholders. So given all of this, what to expect for Palantir stock? So let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
All right. Joe, thanks for the thoughts. And $29 price target gives us something to look forward to if this thing can hit the numbers. Joe Bonner from Argus, Tom White, looking at some of the options here. Look, we're buying some dips here this morning, Tom. We're trying.
Yeah. Just a little bit, yeah. Mm-hmm. And I think if you take a look at the overall market and the sell-off that we've had, I'm not surprised that they're seeing a little dip buying because, what's changed in the narrative besides that one unemployment, number that up to 4.3%. Volatility still expanding at this point, but maybe markets were overbought at that point with 22 times forward-looking PE
Right.
the S&P 500.
Management's guidance for Q3 2024 forecasts even larger revenue, with adjusted income from operations expected to range from $233 million to $237 million. Moreover, heightened their expectation for adjusted income from operations to between $966 million and $974 million, indicating continued strong performance. Investors should keep an eye on Palantir's ability to maintain these elevated performance levels, particularly in the high-growth U.S. commercial segment. The company's focus on innovation and rapid deployment is likely to support its expansion, but it is important to monitor any pressure on valuation multiples and potential impacts from its significant reliance on government contracts. In summary, Palantir Technologies has delivered robust Q2 2024 results, exceeding many expectations and setting a promising outlook for the upcoming quarters. With a diverse and growing customer base and continuous improvement in AI-driven software solutions, Palantir is well-positioned for sustained growth while navigating the inherent risks associated with its valuation and business model. The question is, are you ready to join the ride? What are your thoughts on Palantir's future in the AI economy? Share your opinions. After all, in this intricate dance of stocks and speculation, every viewpoint counts. If you would like to know what companies like Palantir have been up to these past few days, go ahead and click on the next video on your screen. See you there.